Hey, what's going on? Hello. Welcome to Our Stock Trades. All right, we got another video for today. Literally a two for. What's going on, guys? What's going on? Mic check 1, 2, 3. All right, let's do this. All right, so first, you guys already know my legacy when it comes to looking at other stocks and doing the intrinsic value. To all my OGs from the Mastering Stock Market course, my apologies. It's been some time since I've been, doing some proper due diligence. But you know what, man? We're going to go ahead and get back to how we used to. But just remember, okay, this is not financial advice. This is just from an educational perspective. I am essentially showing how institutional investors look and analyze companies. We're going to do a quantitative analysis, and then later on we can follow it up with a qualitative analysis on the recent stock picks for ON Semiconductor. So this is a stock that I like, and it's a stock that I am essentially looking into getting involved in. So let's go ahead and take a look at it. So overall, we can see here that semiconductor has recently on stock has recently decreased in value, and I found that quite interesting. So if we were to go to on here, you can see from peak to trough at $105. You can see on semiconductor literally dropped 38%, right? So, I wanted to investigate the matter to see what's going on here and potentially to see if I can take an advantage of the situation. So before I get into it, I always wanted to look at the 10-year financial data. And I see that over time on semiconductor, I'm going to just call it on from right now, ON. I'm going to call it ON. ON has essentially been able to increase revenues from 2013 to 2023. And if you graph this in your head, you can see that the increase is back-ended, even though it's a nice, beautiful, continuous increase. The gross margins of the company has been improving steadily, and at the later end of the year, the gross margins are becoming even more effective. Same thing with operating income as well as the operating margins. If you look at net income, you could see that they're now in the $1 billion range for net income. So this definitely is a strong company. And the earnings per share for the stock participants here obviously has a component of net income is going up. And no other further dilution as it's been stable. So they're definitely good to their shareholders, as well as book value increasing readily. I also want to call attention to the free cash flow. It's been going up consistently, and now we're in the $1 billion range for free cash flow. We're going to go ahead and see what the trailing 12 months is going to be. But when we input it in our intrinsic value calculation, we're going to take into effect these lower numbers in comparison to these higher $1 billion range. So overall, I went ahead and used our proprietary DCF calculation from our brain machine, which is data from Our Stock Trades. And currently at a stock price of $64, Brain Machine was able to determine the stock price of $71, which is essentially about a, let's see here, 71 minus 64 divided by 64. That's about a 10.9% increase. Now, again, 10.9% is not something to cry about. And again, there are different phases of folks. There are some people that just want to look at one stock, and I don't agree with that. I think a diverse part of portfolio is indicated. This is for folks that are serious investors that essentially have a couple of million and they want to essentially grow this, or whatever type of portfolio, however large your portfolio is, you want to essentially build a strong portfolio that gives you involvement in the semiconductor space and take advantage of stocks that go under its intrinsic value. So I went ahead and I wanted to see what are the revenue estimates for this company, and they're looking at about 6.8% growth rate. But when I did the calculation for the intrinsic value, I found that the growth rate for net income is actually 30% for the past 10 years, and then 12% for the revenue for the past 12 years. So what I did is I took a 15% growth rate and an upper edge, because I believe this is more back-ended growth, because you can see these dud years when semiconductor spaces weren't doing that well. And interestingly, I wanted to look at any red flags, and I saw that in the past 3 to 6 months, insiders have been selling in the tune of $9.9 million. So we went ahead and I looked into our stock terminal, and I want to look at insider trading. And I pulled up the data here, and you can see that the director, EVP, CEO, and president, and maybe this is like the vice president here, Keaton Smith. We can just go ahead and Keaton Simon here. We can see who the hell this person is. Yeah, exactly. The VP has sold a lot of stock. I mean, just look at this. Just this one sell here at $105, 20,000 shares. So if you just took 105 and multiplied it by 20,000, just that one sell is equivalent to 2.1 million, right? So again, insider trading is so important, especially if it's a directed sell like this to this magnitude. Again, they carry a lot of shares in the background. So the sell seems insignificant, but again, these people are smart. They know the value of their company. So you're not really seeing any buys. In fact, you're not seeing any buys. You're seeing a lot of sells. So, we know from Peter Lynch that if somebody buys a stock, you understand without a certain number of doubts that they're wanting to buy to increase their money. People can sell for any reason, but when you get a large sell like this, that's pretty aberrant, I would say, by the orders of magnitude of 9 times the normal from the past 6 to 12 months. It's something to investigate. And if you were to look at the concentration of sells, they really are at the $105 region, $100 region, $99 region. And if you were to look at the stock price here, you can see that they literally sold at the top. They literally sold at the top. So what does that tell you? That tells you that they believe the current valuation of the company got to a point where it was better to have some of the cash to live off of, to essentially enjoy and relax and keep the others maintained. You could see here, as soon as they sold, it was a great indicator to, the stock terminal. You could have figured it out, but also if you would have done an intrinsic value, you would have realized that this is overvalued, and that's why they sold. But again, I digress. I'm going to prove that to you. But on the side note, Ken Griffin, we haven't seen any purchases, but if you look at the purchases here, overall, he has around 2.13 million shares, which is a value of $133 million. Ken Griffin is the CEO of Citadel, right? And you can see they increased their position by 94.2%, which is equivalent to 1.03 million shares at an average closing price of $82 from a price range of anywhere between $69 to $94. So right now we're at levels where we're below the average of Citadel. So this is why I'm bringing this, I'm talking about it because I'm interested now. So if you look at the technical analysis, you can see that the stock price now is below the 50-day moving average as well as the 200-day moving average. But again, if you look at the moving averages, the 200-day is around $86. So my price target, the way I calculate it, is actually still below the 200-day moving average, which is quite interesting. But again, just to be very clear, these folks ended up selling up here. These are smart folks. They sold the stock here, as you see from our own proprietary stock terminal. Our stock terminal, we calculated the DCF from a proprietary software, and we saw that it was around $70. But we wanted to manually do it, so we used our Mastering Our Stock Trades intrinsic value calculation. And what we found is a recession is where, this is like 1928 recession, $25, a bear case of 46, a base case of 60, and a bull of 84. Historically, companies that are free cash flow positive and net income positive trade between their base and bull range. Now, I believe, and again, this is just an opinion, not financial advice, I believe a good selling price for me, and when I'm getting into this at 64.84, is $75. And that's a really great 10%, right? And yeah, that's all I have for you guys. This is kind of the analysis I have going on here. And yeah, I hope you enjoyed it. Give it a thumbs up. And again, just to walk, very thoroughly, we went ahead and we looked at a stock. We have more stocks we're going to be talking about. We went ahead and looked at the 10-year financials. We did an intrinsic value calculation automatically from our proprietary software. We went ahead, look what analysts were thinking about for the next year. We then looked at insider buying and selling. We saw insiders were selling. We wanted to know which insiders sold. We pulled up that information through our stock terminal yet again. And we went ahead and wanted to see at what prices did they sell. And they sold at $100, $109. And that makes sense because then we calculated the intrinsic value of the company and we got $84. They were selling way above their intrinsic value, which means that the stock was overvalued when they were selling. And interestingly, Ken Griffin purchased it at an average price of 82, and most likely got in heavy in the younger ranges of the 60s, 70s, we can say, because it's 69. So I hope this was helpful. It's a great, quantitative analysis. I like to follow this up with a qualitative analysis by looking at the mode of the business, going deeper into the balance sheet. And, again, this is some tough stuff, right? But overall, I'm really excited because this is a great drop, and I really like this. I mean, we're talking a drop that I haven't seen since around the beginning of the year. And if it drops more, I'm gonna be very excited. So this is really great. So and the beautiful part is this company is headquartered in Phoenix, Arizona. So go Sun Devils, right? But I'm a Wildcat forever because we're in south of Phoenix, Tucson. All right, ladies and gentlemen, I hope this video was helpful. Again, another video for you today. Hope you enjoyed it, and I'll see you on the next one.